So our first presenter is Paulo Almeida. He's with Tufton in London. He's here to present on the financing of decarbonization. And Paulo, just give me one moment. I will put you up on the main screen.
Good morning.
Okay, good morning, and thank you.
Audio's okay?
Yes.
Thank you. Just a second to bring my presentation up. Okay, thank you, Professor. So I'm Paulo Almeida. I am the Chief Investment Officer. In my world, CIO is Chief Investment Officer, not Chief Information Officer of Tufton in London. I graduated from Webb in 1995 before going into the finance industry in 2000, where I've spent all of the past 22 years and almost exclusively in the maritime industry and primarily in shipping. Just before I go into my presentation, I'll give you a little bit of background on what we do at Tufton. We are an investment manager investing nearly exclusively in ocean-going ships. We have approximately 65 ships of most types in our investment portfolio or fleet at the moment, worth about $1.1 billion. Over time, we've probably averaged, or we've been very close to averaging 1/3 exposure to each of the three main segments: container ships, tankers, and bulkers. Right now, the portfolio is nearly 50% tankers and 50% bulkers. We won't go into the reason for that at the moment, other than we felt that the container ship market was very strong and was due to weaken in the near future. We didn't think people would continue the consumer spending boom that we've seen for much of the past couple of years, and also there are a lot of new ships that have been ordered over the previous 2 years that will be coming to market. So we've repositioned our portfolio. Maybe a little bit more importantly than that, as well as the types of charterers that we work with, some of which have very strong decarbonization goals. Those of you in the US or who use American spelling who are joining remotely, you'll have to excuse the European, the UK versus US spelling in my presentation, but that's where most of my investors are. So the charters we work with are very important to this because decarbonization is a long voyage for the industry, all along the value chain, which is an area that I'm going to discuss towards the end of the presentation, from ultimate customers to retailers, for example, or consumer good companies, to container line operators. In the case of container shipping, which is the segment of shipping that I'm going to focus on in the presentation, I'll explain why a bit later, to the ultimate owners, investors in those ships who charter or lease them to the container lines. Everyone along that value chain has a different role to play in decarbonization and will either pay for some of that or take certain risks in order for taking certain benefits, either in having a lower carbon footprint, which is something that's key for the customer, and then the other value chain players will have different risks and returns. And I'll come back to that at the end of the presentation, but it's very important to know that it's a voyage that can't be done alone. So it'll be across the value chain. Some of the charters that we deal with, just as a final note before we go into the presentation, in the container ship part of our portfolio, we've done a lot of chartering to Maersk Maersk is the shipping company that has the strongest, and I think strongest by far, decarbonization targets, originally having committed to be net zero by 2050, together with Tufton and a few other companies approximately a year ago. They have since then increased or improved their target to be net zero by 2040. To the best of my knowledge, no other shipping company has done that. We also work a lot with MSC, with CMA, and we've had dealings as well with Hapag-Lloyd in the past. So those are a few of the top 5, top 10 container lines. In our bulker portfolio, we've done a lot with Cargill and with Louis Dreyfus. Both of those are large agricultural companies. Cargill is one of the other companies that has made very strong public decarbonization targets. And then in tankers, we've done a lot of business with Exxon, with Trafigura, and then also actually with Stolt Tankers, another company that's quite close to the heart of Webb. So let me now go into the formal part of the presentation. What I'm going to try to do is not take up all of my allotted time. These presentations tend to slip, and then I don't want to impact anyone later on. And I also want to leave a little bit of time for questions from the audience, be they virtual or physical. I'm going to start by being an optimist, but also a realist. I'm saying what I'm saying here based on discussions that I've had with some of the largest pension funds in the world, which are increasingly interested in investing in shipping, and shipping works to decarbonize, and with charterers and with other players in the value chain. I'm very optimistic about the financing of decarbonization and shipping. A lot of people would look at the headline figure of $1 trillion and think that that's a negative, that actually so much capital is required for this. Contrary to that, maybe it's a bit counterintuitive, but because some of the investors in the world, pension funds primarily, sovereign wealth funds, that are interested in decarbonization and pushing it forward, actually want to see large numbers rather than smaller numbers. They have a lot of capital to put to work that they want to invest, providing good returns and also decarbonizing. So one factor is a large market is actually a positive for many types of investors. And the second is the shipping industry has been evolving slowly but surely, and will continue to evolve in a way that will become much less volatile than it was in the past. And actually decarbonization will both make the industry more volatile, less volatile, but also benefit from this trend, because these types of investors are very different from the historical families, primarily European families, that have invested in shipping, some of which appreciate volatility, appreciate the booms and busts of shipping. Most of the world does not actually appreciate those things. And as the industry changes, as it needs more capital, as it decarbonizes, that's going to benefit the industry in the long term. So why are investors interested in shipping? I won't necessarily go through these in the order that they're mentioned here. But one thing that's quite interesting is that shipping, although we as people who are in the industry or close to the industry know it's an essential industry. It moves 80 to 90% of trade globally in goods. However, shipping is not always appreciated by most people in the world. We saw a bit of that in the mid-2000s with the boom in the Chinese economy, both imports and exports. And actually, we've seen a lot of it in the past 2 years. One with the floating oil storage boom that happened in the first half, in the middle of 2020, where the rates that tankers were earning made global headlines. We saw it with the strong increase in container shipping rates due to the global consumer boom that came out of lockdowns and COVID and economic stimulus packages. And then we saw it, once again with the Ever Given getting stuck in the Suez Canal. And now we're seeing it as the impact of sanctions against Russia due to the war in Ukraine are having significant impacts on dislocations in the energy industry, making tanker rates once again very high. So what's happened in the world over the past couple of years, a lot of it has been quite negative for people generally, the world economy, for people in Ukraine especially, and those impacted by COVID directly as well. However, it's highlighted to investors and other people that shipping can often benefit from macroeconomic or geopolitical dislocations, therefore is an attractive part of their portfolio, because shipping can do well when a lot of other industries are doing poorly. Shipping also tends to perform well in periods of high inflation. We haven't had high inflation at all for most of the past 15 years. We saw a little bit of it in the early to mid 2000s. So shipping once again potentially becomes an interesting part of people's portfolios. And shipping is a hard to abate sector. So pension funds around the world are very interested in decarbonization, but especially in hard to abate sectors. What does hard to abate means? Generally, it means industries that cannot be electrified. So you can improve renewable energy to decarbonize power production, energy, electricity. You can electrify cars. You can electrify other types of things, like you can replace boilers that use natural gas or oil with both air and ground-based warming and cooling systems, which just use electricity and don't burn fossil fuels. But you can't really electrify planes, or most types of planes. You can't really electrify a lot of the steel industry, the cement industry, or shipping. So these are industries that global investors are becoming more and more interested in now that they have driven a lot of solar and wind power around the world. Those have become mainstream. Now they're moving towards decarbonizing these hard to abate industries, including shipping. As I mentioned earlier, we made very strong commitments at Tufton. We were one of approximately 20 companies that about a year ago during UN Climate Week committed both to be net zero by 2050, but also to invest in zero carbon capable ships before 2030. We'll talk about that a bit as well. In the meantime, what we're doing is improving the efficiency of the ships in our fleet with energy savings devices, and then also increasing the use of sustainable biofuels, which cut the carbon footprint of ships by between 30 and 90%, depending on what type of blends are being used or whether it's 100% sustainable biofuel. Although shipping is an extremely carbon efficient way to move goods around the world and moves 80 to 90% of world trade, producing only 3% of global carbon dioxide emissions. If we look at shipping staying status quo or only meeting the not very ambitious ambitions that the IMO has, shipping share would increase while most of the other industries around the world would be decreasing. So shipping's share would increase from 3% to as much as 10 to 15%, depending on what happens in other industries. So the industry needs to act. I believe it will get there. So far, the IMO's ambitions I mentioned here are not ambitious enough, and therefore leaders like Maersk, Cargill, Tufton will drive this effort for the industry to start its long voyage towards being net zero in 2050. This is being driven by something generally called responsible investment. Global investors are becoming more and more conscious of the risks in their portfolios that come from climate change. So what used to be a sort of what I call a negative filter, whereas investors would not invest in certain types of industries that had high reputational risk. So that would be driving what they don't invest in. This has changed to global pension funds wanting to invest via positive filter in industries such as shipping that are hard to abate and need a lot of capital to decarbonize. So what it went from avoiding threats to exploiting opportunities. I won't spend too much time on this page, only to show some historical statistics on how shipping tends to perform well in inflationary environments. It's in the pack for everyone who wants to refer to it, but it's beyond the scope really of today's discussion. I'll move on to energy savings devices. So we've been installing suites of energy savings devices on most of our vessels. We will have about 2/3 of our fleet retrofitted with packages of these by the early 2023. We originally had expected to have more of this done by now, but the same supply chain impacts that we've seen generally due to COVID, also due to the war in Ukraine, has delayed this and sort of in securing shipyard space to do this work. Also has partly due to continued on-off lockdowns in China. So we're making good progress on that. We will save approximately 10% fuel and reduce carbon dioxide emissions by that same figure. And these are actually investments that are extremely accretive in terms of investment versus fuel savings that are produced and what our charterers are willing to pay for these vessels. For those of you, I guess at least half of you are familiar with the payback period concept. These tend to have 3 to 4 year payback periods. Therefore, everything after that is pure profit. So those are suites of lower cost, commercially available, generally long established energy savings devices. What we're also doing on one vessel is installing Flettner rotors. So these use the Magnus effect to produce thrust. I think there's a presentation coming up later on wind assistance, although it's with a different technology than Flettner rotors. This also produces about a 10% savings. It's on one of our larger vessels. Therefore, it produces it saves a disproportionate amount of CO2, and we won an award for this. I think there's only about half a dozen ships so far that have Flettner rotors, although there are a lot of these retrofits that are planned over the next few years. We've also used selectively and primarily with our partner Stolt Tankers biofuel on certain vessels. The ship there in the top right, Glen Cove, that is actually one of my ships. I have it here for three reasons. One, it's because it's the home of Webb. Two, because we've used a 30% biofuel blend on it very recently. So that's 70% fossil fuel, 30% sustainable biofuel. The sustainable biofuel does not come directly from crops. So we would not consider that sustainable biofuel. It's primarily made with recycled cooking oil, which if it went into landfill would eventually rot, release carbon dioxide, whereas here we're actually using it as energy to replace fossil fuels. Therefore, it's considered a highly sustainable form of energy. In addition, the Glen Cove, which is just 1 or 2 weeks ago come out of dry dock for its third special survey, we've also installed a suite of energy savings devices on it. Again, is more for reference and for your pack. I think that the industry has generally slowly, but eventually, but fairly consistently organized itself to reduce its environmental impact. We had double hull tankers, we had the reduction in sulfur dioxide emissions, and now we're slowly but surely moving towards greener fuels. And of course, like I said, it's a long voyage to get there by 2050, and no one will be able to do it alone. But I think the roadmap is reasonably clear, and we want to be one of the pioneers on that roadmap. Just a couple more slides before hopefully getting a couple of questions. What's driving my thesis in terms of shipping becoming a more interesting area for large investors is being driven both by the supply factors and the demand factors. By the supply, I mean the supply of ships and the supply of capital for ships. If we think about how the industry has historically been organized, the median ship owner has somewhere between 4 and 5, between 4 and 5 ships. For someone who owns 4 or 5 ships, has a small technical team, etc., decarbonization is a big challenge. Replacing fossil fuels with drop-in fuels such as sustainable biofuel is feasible, but looking at more expensive new builds, new technologies is a huge challenge. So that's why it's very likely that, just as we've seen in other industries like real estate, like aviation, we've seen consolidation where a very large number of small operators ultimately, slowly but surely, get replaced by a smaller number of large operators that are much stronger financially. This is something that's very good for the industry. It's already started 20 years ago, but just like decarbonization is a long voyage, so is the voyage for shipping to consolidate into a fewer number of much larger operators. And then the demand is the pull from primarily from container lines, and I'm going to come back to why that is on the next page. But it's the container lines and the container shipping industry first that will decarbonize. But it's also coming from some of the energy companies, and also the agricultural trading houses and some of the mining companies, because they all have public all have public faces, and although they don't directly deal with consumers, they are under pressure, as we all are, to decarbonize their value chains as well. I mentioned that I was going to use the container shipping as an example, and the reason I use it as an example and why container shipping is likely to be the first to decarbonize, and it already is in terms of commitments made by Maersk, new buildings ordered by Maersk, CMA, COSCO, is it's the nature of the goods that container lines carry. So ultimately, they carry primarily consumer goods. So consumer-facing companies like IKEA, Amazon, many others have signed commitments. They themselves have committed to get net zero for their ocean shipping, and only Maersk has matched that so far. And why do they want to decarbonize? Well, they're facing the public. They want to show their consumers that they're lowering their carbon footprint. It's only a matter of time before price tags in shops, in addition to mentioning clearly the price, will also have a carbon dioxide for door-to-door transportation and along the whole value chain. What's really interesting, and there's a lot of great analysis on this, is actually decarbonization for consumer goods is actually extremely affordable. You take a basket of goods and it costs somewhere between not much more than 0 up to about 5% to fully decarbonize the value chain. Now that's partly because these are higher value goods. Doesn't work quite the same with dry bulk and wet bulk commodities, but that's the reason that container lines are probably the first ones and are the first ones to decarbonize. So consumers want a lower carbon footprint. They're telling the retailers or the consumer goods companies. They also want to decarbonize. How can they decarbonize their value chains? They then push the container lines to decarbonize. The container lines can't do it on their own. They tend to own half their ships and charter in or lease about half their ships. So then all along the chain, people like Tufton and others, we provide assets to the container lines. Along the way, people are either paying slightly more for their goods or their transportation or for their ships, but we're sharing risk and return all along that value chain. And this is the sort of partnership that's necessary to start decarbonizing container shipping, which will be the first of the other sectors to decarbonize. And this is the beginning of the long voyage that I mentioned. I'd be happy to take a few questions if there's time, if I've not overrun too much.
There's a question right here.
Who was it? Yes, Rick.
Hi, Brad. I actually recently have started to kind of think about the hub and spoke models of container shipping, where ever larger ships are inherently more efficient and actually dragging huge amounts of cargo to the big port where it gets redistributed. And is Tufton also getting involved in door-to-door carbon emissions rather than just for the ship itself?
Oh, I don't know. Did you hear that question?
I heard probably 70% of it in terms of larger container ships being more efficient, but I must apologize. I didn't get the crux of the actual question. Maybe he was too far away from the mic.
Is Tufton getting involved in the door-to-door side of things? Door-to-door efficiency. Sorry.
Yeah, we are not getting involved in door-to-door efficiencies. There's a simple reason for that. We think we understand the ships pretty well, and therefore that's where we're putting our money. Clearly, Maersk, who's our customer, is hugely invested in the whole value chain: IT, container boxes, trains, terminals, trucking. They even have some airplanes now to supplement what they have on the container side. What we are looking at, however, a little bit differently, but also part of the value chain, is we are to some extent looking at bunkering, which is providing marine fuels, and also potentially making some investments in technology providers that facilitate energy savings. But we're not really investing in other parts of the value chain currently.
Okay, what I'm going to do is I'm going to turn this microphone around, and hopefully that'll pick up the question a little bit better. Go ahead.
Hi, Paulo. I have actually two questions. First is on the finance side. You mentioned that the ESP is a return of 3.5 years. I'm sorry, this is awfully good for the industry. So what's the tolerance for investment? Can you do investments that really bring environmental benefits with a payback of 7, 8 years? Is that something the industry is considering right now? What would be your kind of big spend? What would be your limit?
Yeah. No, that's a great question, and I actually forgot to. I talked about the Flettner rotors, which we're doing on one vessel. The Flettner rotors actually have a payback of around 10 years. They're I guess the other main technology that's fairly capital intensive that has a long payback period as well would be air lubrication, which is something that tends to be more prevalent in new builds rather than in conversions, because we've historically invested primarily in secondhand vessels that are 5 to 12 years old. It's not something we've looked at. However, we are looking at new builds increasingly, because we have to look at new builds if we're thinking about zero carbon capable ships. And what's interesting as well is that I didn't touch on it in the presentation, well, sorry, I did when I said that products will cost more if there is a low carbon or zero carbon supply chain. Now, that implies that the ships are more expensive. I think we all understand that. And I think most, or maybe even all of us, understand also that means that the fuel is more expensive. The more expensive fuel is, the more the value there is in fuel efficiency. So therefore, larger investments in energy savings, such as wind assistance, possibly air lubrication, those actually become better investments. So maybe something that was marginal with a lower fuel price at 15 to 20 years payback period become more like 12 to 15 year payback period, become more attractive.
And the second part of my question was that you showed the charts that say the evolution, the timeline of technologies that you envision to 2050. And I didn't see wind for the wind assistant. Maybe I missed because there was a quick time, but everything was focused on fuel, alternative fuels, low carbon or zero carbon fuels. Where's the wind in the end of the 2050?
If I covered everything that I'd like to cover, I would teach a semester course rather than do a 30-minute address. That page was yes, focused just on fuel transition from gray to blue to green. Wind, unfortunately, and other types of either renewable power assistance or energy savings devices are not enough to decarbonize. They are very strong tools to help decarbonization in addition to what's happening on the main propulsion and fuel side. There are certain conditions, and I think someone else, may bring this up later. Under certain conditions, you can almost replace certain types of ships at slower speeds in certain markets that are very windy with almost 100% wind assistance. But that's a pretty small market. That's not going to make more than 10 or 15% difference across shipping generally. So it's an important part, but it's a small part versus new propulsion methods and new fuels.
Thank you.
Okay, there's one question coming, I see online from Jeff Upmark. Jeff, I'm going to enable you to speak. You should be able to unmute.
Good morning, Brad. Testing audio here.
Yeah, good morning.
Okay. Thanks. Hey guys, thank you for having this seminar. So far, fantastic. Paul, I just want to apologize. I missed the first 15 minutes. Here in New York City, we have alternate parking. Mundane, but I had to move the car. And so if you addressed my question in the part of your presentation that I missed, please pardon me. My question is Tufton adhering to the Poseidon principles in the decisions you are making regarding trying to help finance innovative fuels, or are you doing this unilaterally? And as part of your answer, can you outline for us where do the Poseidon principles always apply, and when are they applied on a subjective basis? And before I let you answer, just a quick comment to Brad. Brad, this question is coming from Jeff Utmark at Trans-Tech Marine Company Ship Shares LLC. Can you?
And we lost. Okay. Yeah. Looks like we lost him, but anyway, Paul. Oh, we lost Paul.
Ask all questioners to identify their organization. Now I'll.
Sure. So thanks very much for that question. I did not address that directly. So Poseidon principles are a very positive step for the industry. Poseidon principles relate to primarily banks and now also to insurance companies in terms of how they transact with players in the industry, with shipping companies. We are an investment firm. We are not a bank, so we don't lend to shipping companies, but we buy ships, sometimes order new builds, and we charter them to different operators. So what we are, and there was a logo, actually it was on the first page and the last page, we're a member of something else called the Principles for Responsible Investing, which most of the large investment firms around the world are part of. It's a UN sponsored organization, and that governs how we invest. In addition, we're part of the Getting to Zero coalition, which is specifically for shipping. And then we made commitments last year at UN Climate Week, New York Climate Week, for being net zero by 2050, and also investing in zero carbon capable ships before 2030. I think what the Poseidon principles are trying to achieve is obviously great. The targets that we've set ourselves by 2030 are actually more stringent than the Poseidon principles, as good as they are. So we are, in effect, unilaterally, but with partners, like some of the charterers that I mentioned, potentially trying to do a lot better than what the Poseidon principles aim to do, which, however, is still very, very positive for the industry.
Thank you very much.